Hello, folks. Welcome back to 3 at 3. Every business day at approximately 3 p.m. Eastern Time, we bring you unusual option activity that we have discerned, that we have found by virtue of our heat seeker algorithm, which is looking for large blocks of options that are traded on the offer. Those are the ones we care about, not the ones that are sold on the bid. If it's a call sold on the bid, maybe it's covered right. If it's a put, maybe somebody's bullish. It's not the same as getting a levered bet on the upside of a call and that underlying equity, or the downside if they're buying a put. So with no further ado, let's get started with today's 3 at 3. Our disclaimer is that what I'm presenting is for educational and informational purposes only. We are not your investment advisor. And by the way, all investments involve risk. And similarly, we do have intellectual property rights. They are not limited to, but include copyrights, trademarks, patents, and registered marks. We have that on virtually everything you're about to see here today. So please ask us before you reproduce it in any fashion. Let's talk about this one. This was my trade of the day at the end of the game yesterday on CNBC. It's called a final trade. And we wanted to do it as one of the bits of unusual option activity. But since we'd spent so much time on Coinbase, CNBC said, let's do that one at the end rather than, just keep hammering you guys with my expertise on digital assets or cryptocurrencies. So that's what we chose to do. But nonetheless, as you see here, my pick was PLBY. And why was that? Well, because Playboy, PLBY, had unusual activity time and time again. So not just once, not just twice, but 4 separate times we have seen big accumulations of calls in this particular name. And look at it. From the 19th of March, we had 3,000 of the April 20 calls. Those calls expire this Friday. Then on the 1st of April, we had 2,500 April 25 calls. They're moving up, with the stock moving up to 24.50. And then the 22.50s out in May and the May 40 calls and so forth. All of that told us that people wanted to be in this. Now, why? I could spend the next hour telling you. And I've been talking with a good reporter friend of mine who's probably putting out a story on it. So rather than beating up that story too much, I will say that PLBY is Playboy. And this is probably one of the biggest moves Playboy has ever made. And why is that? Because of NFTs, non-fungible tokens. So that's the tie-in between Playboy and the digital asset market. So a non-fungible token is, in simplest terms, you've got one Mona Lisa. Everybody has a picture of Mona Lisa. Not everybody, of course, but almost anybody with a cell phone has a picture of the Mona Lisa when they were in there. A lot of us took pictures with 35 millimeters and so forth. It ain't the same as owning that painting, folks. Most of those pictures are not worth anywhere near the $1 billion that they say, the Louvre says that the Mona Lisa is worth. So on the one hand, you have a whole bunch of copies and one original. And in the case of Playboy, can you imagine what the original Marilyn Monroe Playboy cover would be worth if it was only one? If they're only producing one NFT, non-fungible token for that digital asset, I think that's worth a lot. Now, I'm not saying every single picture that's ever run in a Playboy is going to be worth thousands or millions of dollars, but I think certain ones are. And for that reason, there's a significant revaluation of PLBY. Take a look from the 19th of March, when it was $19 stock, to yesterday when it was $37 stock, and now today, $41 stock. I think it's been to $44 today. So bang, that's why we trade options, my friend. Let's talk just for a second about our other property, the Daily Crypto Bite. It goes off at 10 a.m. Eastern time every day. Those two gentlemen on the bottom there, CJ on the left, Matt or Monty on the right, are the folks that wrote our curriculum for Crypto Rebellion. They also host that chat room that we have. You could join it for $1 a month, $1 for the first month to try it out, see if you're getting enough value out of it. And then, of course, it is slightly more expensive than that going forward. It's $29 going forward. So we're not breaking the bank on it, but thousands of you have signed up for it. We appreciate the support. And we are sponsored every day by Voyager, one of my favorite trading platforms. I use it on my phone all the time for trading crypto. Check it out. Voyager is our sponsor. I am also an investor in Voyager. Now let's talk about Boston Scientific, BSX. Boston Scientific, Pete used it as, I think, his final trade today. And I had it already for unusual activity. There it is. The stock's roughly $40.90. They were buying 3,100 of next week expiration 41 calls. So they're buying the at the money call a week out into the future. And the 23rd of April expiration is why there's a 23 in front of the April on that print. So they also got in here and sold a bunch of the 39 calls, taking profits. I love when somebody's been right, take a profit, but they still want to stick with it. That's what they're doing here. Boston Scientific, BSX. And there is the stock still at about the same price, $40.97. Bang. That's the first of today's 3 at 3. This is our YouTube site. Thanks to you guys, we'll probably be over 17,000 subscribers tomorrow. I really appreciate that. All of us do. That YouTube site, you just go to YouTube, you type Market Rebellion, couldn't be easier. Then that big black arrow that I tried to draw in there, that is the subscribe button. You click that and or the bell next to it as well. If you click the subscribe, you are subscribed. If you click the bell next to it, you'll be alerted every time a fresh video goes up. Pete does the take every day live at 10:30 Eastern time. We do the daily crypto bite that I described at 10 a.m. We do my 3 at 3 at 3 p.m. Eastern time. Those are many of the offerings you see across the bottom of your screen there. Pete's the take, the daily crypto bite, my 60-second video, as well as 3 at 3. Encourage you to sign up. It is completely free and a great way to stay on top of what we're following. Here's Pete talking about Keurig Dr Pepper, which is KDP. So KDP, Pete's buying the calls that expire May 21st. Which calls? The 36 calls. So that's 36 calls a month out into the future. There is the stock, Keurig, trading $35.91, virtually 36. And as you see, he's buying the 36 calls. So those are the ones I'm buying. The at the money call, the 36 calls, selling a call above it as this thing rallies, which I hope it does. I will sell calls against it 1-to-1. As long as you do that 1-to-1, folks, you have no additional upside risk. And it mitigates a little bit of the downside risk because you're hitting premium, time decay, as well as volatility. You get to kind of have your cake and eat it too. That's how I move the odds into my favor. What's the trade-off? Trade-off is if you write an upside call against the 36 calls and the stock zooms through there like it did in the case of Playboy, PLBY, you're not getting all the upside that somebody that just bought those calls naked did. And yes, I do get the pun, naked and Playboy. Seize control of your financial destiny. Yes, if you'd like to, you can go to marketrebellion.com, type in /get started, and you can see about distance learning, which means anytime, day or night, that you want to bone up on trading stock, options, futures, cryptos, you can do that. We have coaches, we have mentors, we also have subscription services. We don't jam them down your throat. We have them offered out there. You guys decide if it's appropriate for you. Thousands, tens of thousands of you have done that. hundreds of thousands of you, knock on wood, have bought our book and then migrated over into our site. We appreciate that. I'd say please check it out, marketrebellion.com/get started. Now let's get to the third of our 3 at 3, which is Kratos Defense and Security, KTOS. I've done this one myself about 2 weeks ago on the halftime report. Pete was talking about May 30 calls. There's the volume. Yesterday, the 14th, about 3,500 of them traded. Today, over 6,500 of those calls trade. Somebody thinks something's going on. I want to follow those somebodies. So May 30 calls is what they're buying. Stock's 28. That's $2 out of the money. I buy the at the monies generally whenever I can and sell the higher strike against it 1-to-1. Watch this one. Stock certainly interesting at 28 bucks. Gets much more interesting at over 30, and that's what we're betting on. Bang. If you've got questions, we've got answers. Send them in to @Jon Najarian or @3at3_UOA. Let's see. Amit asks, "Hi, John. I would rather like to kindly request your perspective on the following. Can an OTM, which is out the money, meaning above the market, he's talking about puts. Can an out the money put buy and an at the money put sell, same expiration, ever be more useful than the usual at the money call buy and out of the money call sell for the vertical spreads when we're trying to play a bullish UOA? Can it ever be more useful? It's about the same use in many cases, Amit. And Amit's handle on Twitter is @AMITJB376. So yes, selling a put spread for a credit, which is what he's describing here, selling the at the money put. So let's take, a $28 stock like we just had with Kratos. If you sold that 28 put and bought the 25 put, that spread can only go to $3, the difference between 28 and 25. So collecting a credit for doing that is a great way to bet on the upside. You're betting and hoping that it doesn't go to the downside, because if it goes to the downside, that $1 or whatever you collected for that spread could go to $3, which means you lose $2. On the other hand, if you buy an at the money call, the 28 calls in Kratos, and sell the 31 calls, same $3 spread, except one's a call spread, one's a put spread. If you do that, then your risk is defined when you enter it. If you paid $1 for that spread, for instance, it could go to $3, the differential between 28 and 31. But you know that you're only going to lose $1 if you're wrong. In the other case, you know that you're going to keep $1 if you're right, but you're going to lose $2 if you're wrong. So yes, both have use cases. Many of our subscribers trade exclusively put spreads, betting on, hey, if there's good call activity, I'd rather collect a put and not put my money into these call spreads. That's fine. Like I say, I like having a $1 bet to turn that $1 into $3 more than I like collecting $1 with the possibility of losing $2. Thank you. Rami. Hello, Rami. Coin is what he wants to talk about. Cathie Wood is going to lose big time on her investment with Coin. This is a speculative move I wouldn't take. And he copies that to me, saying Cathie Wood and ARK Invest sold 177 million of Tesla to help fund 250 million in Coin, which is Coinbase. And his handle is @VeryFatCat. I like that, Fat Cat. All right. Well, Rami, Cathie is brilliant. I don't like betting against her, and I'm not betting against her. The reason I say that she might not lose big time, as you say, on this investment is as follows. Coinbase is a broker. They are an exchange. They are a bank. They are all three. The NASDAQ and CME are one of those three. So I think they have a lot of levers to pull. They make money from commissions on trades. They lend out securities, in this case, digital securities, and they can be a bank as well. I like that, and I think that's a great business. Now, they have far more customers than Goldman ever has. They are trading at a valuation about the same as Goldman Sachs. Now, does Goldman do a great job? Full disclosure, I used to trade for Goldman, for the partners at Goldman Sachs. But does Goldman have the gazillions of customers that Coinbase has? No. Can Coinbase offer them the credit card offerings that Goldman is now pushing for its customers? Yes, which is more valuable. Well, the Goldman customers are high net worth. That's a very valuable customer. You're hunting elephants when you're hunting those guys. But I like the idea that Coinbase has so many things they could offer: mortgages, student loan repayments. They could get in here and offer credit cards and all that. I mean, it's not endless, but it's certainly very attractive. So I don't think that it's a big time loser if you buy Coinbase at 100 billion valuation. So I guess I'll have to take the other side of that. Let's talk about this one. We're getting one from Gary Hargraves, who says, dream as if you'll live forever, live as if you'll die today. I agree, Gary. And he said, VIX. I established a VIX call spread a few days ago, bought this July 25 calls, sold the July 40 calls, net debit $2.10. So he's doing a $15 call spread, 25, 40 is differential 15. So he's paying $2.10 for something that he could make nearly $13 on, more than 6 times his money. Do I like that? Yeah, I like that. Mirror the big $40 million play that John talked about. Cheap insurance, decent chance to make some upside. It's both. Cheap insurance, potentially, 50 Cent did that trade. And is it something that I would do if I had a big portfolio of S&P related assets, which I do? Yes, and I have that. So I agree with you, Gary. I did it for protective measures. You're doing it betting on the upside for VIX, which is usually the downside for the market. I used it for protection. You're using it as a bet, I guess. I think both work. Thank you, Gary. And his handle is at GARY_Hargreaves, GREAVES. And now let's end it with this one. Opfi at OPUFY1 says, I like their more conservative AMG bodies than this cartoony design. Like, why not just go sick old G-Wagon with a battery, with electric battery power? Probably because the G-Wagon's a lot heavier, and it's shaped like the state of Wyoming. So it's not terribly aerodynamic, which is one of the things you kind of want with electric vehicles if you want range. It'll be one of the challenges of the electric Hummer, of course, the fact that it's, the windshield and everything isn't slanted as severely as this or the hood, and instead is more of a block than a foil. So anyway, I get what you're saying, sir, but I love this car. And I was in a fabulous AMG down in Puerto Rico last week. It wasn't this one, of course. That's not out there till 2022 or 2023, but it was just fabulous, fast as lightning. And I love Mercedes-Benz. I think they are indeed one of the best manufacturers in the world. It'll be interesting to see. Right now, they're claiming over 700-mile range. I don't know if they'll get anywhere near that, but I'm going to keep an eye on it. I'll be right on. So right now, folks, I'm dropping off. I hope you have a great day. I'll see you soon. Bang.